Good morning, everyone. Happy Tuesday to you out there today. Don Cramer with the Cramer Group at Urban Realty. It is Tuesday, and we are here with episode 93 of Coffee with Cramer and Colleen. So, welcome to today. My partner, Colleen, sends her best today. She's out doing a little real estating. We've got a closing coming up, so exciting to see. That being said, we're a little later today than we normally are because we had a couple of items we had to attend to, but we are here because today is what we want to go over, which is key. It's the August recap. So we've got the numbers here for August and give you a little 411 on the numbers, what happened, maybe a little insight as kind of where things are going for September, and little thoughts and insights of maybe what the fall may be in store for us. So while we're here, if this is your first time on the show, do us a big favor. Hit the like button. Let us know you're here too. And then subscribe. Now, we'll be posting this a little later on some of our other outlets, such as YouTube. And if you pick up, we have a lot of people tune into the market recaps on YouTube. And if you'd like to kind of keep up to date with more information about our show, Coffee with Cramer and Colleen, where we talk about real estate, lifestyle, and community, do us a big favor, hit the subscribe button. That way you can be alerted as to when we drop new videos each week. So let's dive in and get started. So we will begin with the August sales numbers. So for the month of August, we had in the Las Vegas Valley, these are single family homes, 2,910 this past month. Now, that's a little down from the July number, which July was a big number for us at 3225, and also down slightly, about 8% from August of last year's numbers of 3168. So we had a slight dip back in August, and a lot of times August sort of either tracks pretty well with July or is a slight dip. Part of it, I think, has a little bit of school where kids going back to school, stuff like that. But our July number, our August numbers had a little pullback, but not too bad overall. And if we go on to the next slide here, which sort of shows the historical, you can sort of see where the trend lines were. You see the big dip from a few months ago during COVID back in April, May, and then early parts of June. But July and August still showing some pretty decent numbers here. Even if you roll us back to June of last year, September, we're sort of tracking where we were in those time periods a year ago, and we had a pretty robust July and August combined last year. And I think if you add the two together and average them out, this year we're kind of meeting about the same. So when I look at it, when we looked at the demand and with what we were dealing with clients, both on the buy and sell side, it's still the if you measure them in a 2-month period, they still look pretty robust overall. So let's move on to the next slide, which is the next key element, which is the median home price. Now, we did set a new record there at 335. So that's up a point and a half from the July number of 330. And if you look at it, we're almost up just under 10% year over year from last year. So while our total sales were down slightly in the month of August of this year, our median home price did continue to tick upward. And if we take a look here at the next slide here, you can see sort of the trend line where it's been going. For the most part, we've been kind of having that slow upward trend over the last year and a half. But then as we sort of kicked into January, we were seeing that surge because we were seeing some still low inventory numbers. Interest rates were quite attractive. COVID comes in, kind of takes some of the heat off. However, the upward trend continues to show, and I think a lot of that has to do with overall still, typically historically low inventory levels, coupled with a low attractive interest rates for buyers. So again, so we're going into 335 versus last year's number. Actually, this one I'm going to back up a little bit here. So 335 versus the 330 number. Now, where do we see that line going? I want to kind of touch base on those at the end of this video, so as we kind of look forward to September. So let's move on now to kind of maybe why we might have seen a little bit of a dip in the numbers, overall sales. And I think this is one of the items. It has to do with, let's go to new listings. So if you look at August of 2020, we put 3,887 homes onto the market versus the previous month we put on 3,703. And then a year ago, we put on 4,113. So we're sort of a little in between there, plus 5% and minus 5% between comparing it to the previous month and comparing it to previous year. Now, when I look at that number, the new listings number gets into how many homes are hitting the market. And we've been seeing just an incremental increase, which is good because it's kept up with demand for the most part. But sometimes the new sales, the new listings versus demand, if it gets a little out of whack, that does have a tendency to starve some of the home sales. So, we had a really big demand in July. We put, a little over, just shy of 200 more homes on the market, but probably not, certainly not at the rate as we did a year ago, where, we had another almost not quite 300 homes. So that, I think when you look at that strong July number, slightly less homes hitting the market in August, led to a slightly lower number of total sales. So those are kind of the balancing factors there that we're seeing. Now let's move on to total active listings for sale. And if you take a look here, we're down again to 4,639 single family homes in the Las Vegas real estate market. And that number's down from the previous month of 4,806. And look, we're still down from our previous year's number of 7,766. So you can just see year over year from 19 to 20, the inventory is being held back. Then that's what we're continuing to see that level. Now we're going to probably, as we get further into the year, we're going to probably see a slight tick up in inventory, because hopefully we're going to continue to see houses hit the market, and we'll see if demand continues to keep pace or build a little separation. I'm actually hoping for a little bit of separation, and again, I'll kind of get into a little bit as to why. Now let's go over to what does that mean total supply side here. The good news is we did tick up because of that slightly less sales and such. Our demand and month supply of inventory ticked upwards from 1.4 months to 1.6. So we're just a little past the month and a half mark. So to give you a little bit of context there, that's about 45 days overall of total inventory across single family homes. And when we were down to that 1.4, that trend line was getting a little too hot to handle, both in price point, just demand, and availability of just homes for sale, because we were seeing multiple offers come in, and we just need to not quite have the accelerator fully down. So seeing that slight tick up to 1.6 is good. Excuse me. And hopefully we're going to see that tick up just a smidge more. And I think we can stay pretty healthy when we're in that two-month inventory range. I know that's still a pretty strong seller's market, but that gives us a nice supply of inventory coming in, keeping up with demand and going out. And as you can see, most of 2019, we were sort of between that mid to upper 2.5 month, so the mid 2.5 month to upper 2.5 months. So we're talking, between 70 and 90 days worth of inventory, and right now we're still hovering around the 45. So month supply looking pretty healthy. Now, if we move on to the average days on market, this is like corresponding with that. Excuse me, where we're seeing 43 days. Average listing staying up there. Couple days ticked upward from the July number of 41. So again, we're still on average the last several months in the upper 30s to low 40 range. And when we compare it to a year ago this time we were in the 40 to 47 day range. So about overall about a week longer on the average days on market that a house is sitting out there as well. Now, the next item we want to take a look at is by price point. And we like to take that next layer off because this gives everyone who's a buyer or a seller, depending on the price point they're looking at, a good gauge of where things stand. So if we look at the under $250,000 price point homes, there were 366 closed sales. There were 394 new listings, and we have a total active listings of approximately 565 properties. So closed sales, new listings coming in, almost on par with each other to some degree, and then actives just a little over about five, over there at 565. In our core segment, which is the 250,000 to 500 price point, we had 2,054 closed sales. We had 2,860 new listings, and then active listings for sale, 3,458 single-family homes. Moving up to the next price point of 500,000 to 750, we had 344 closed sales. We had 521 new listings, and then active for sale 923 throughout the valley. In the mid-luxury segment, we had 80 closed sales. We had 139 new listings, and then we had 338 active listings for sale in $750 to $1 million price point. And then lastly, in the homes priced over $1 million, the luxury segment, we had 70 closed sales. We had 150 new listings, and then we have 547 actives. So as you can see across there, especially in the entry level segment, we had almost as many homes sell as they went in. In the next segment up, the core segment, we did have more listings come in to the market, but that's good because we needed to add a little bit of supply there. The mid luxury segments, they're kind of pretty much holding steady and keeping prices in place as well as the luxury segment. Now, if we look at days on market, you can see what would be expected for a house to sit on the market as compared to last year based on price point. So in under $250,000 segment, we have they're sitting on the market for about 45 days versus last year's number of 35. Really no change in the $250,000 to $500,000 segment at 41 days. Likewise in the $500,000 to $750,000. In the $750,000 to $1 million, just a modest change of 1 day longer on the market versus last year on average. Now the over $1 million segment sitting out there a little bit longer at 101 days versus 88 a year ago. Now I kind of dove down one more layer in broke out. It's not on this report, but took a look and say, okay, well, what's that look like between 1 million and 2 million versus 2 million plus? And the 1 million to 2 million range is a little closer to the average from last year versus the 2 million plus is sitting out there, and that's kind of what we're seeing, because we are as unique as what's going on right now. Even homes in that 1 million to 1,900,000 price range are moving, albeit a little bit slower, but they're actually trending a little bit under that 101-day average. So those are the big stats from August. And so what does that bode for September? Well, in September, we've had a couple of things going on. One, everyone's, kids are back to school, although in a lot of cases they're homeschooling. Some of them, were able to find some charter schools or private schools that were doing in class situations, practicing safe policies. But right now, with that going on, I think there was a little bit of cool down for a bit that we saw early part of latter part of August, early part of September, just as sort of people are dealing with it. Then we saw a bit of a pickup again in the early part of September, sort of between Labor Day and going into last week. Now, is pickup? Are we going to continue to see that trend through the months of September, and September kind of look more like August? I think it might be a little bit of another August light, if anything. Now, again, interest rates are still kind of at historically low levels, so those demands will still be keeping in check, but the mix of people away, kids out of school, things of that nature may have a bit of a slight impact on demand. Maybe just a little bit of tempering off. Now, at the same time, we're still seeing houses come on the market, although not quite at the rates we saw pre-COVID or even well before COVID. We're still seeing some of that holding on pattern. Again, people concerned about COVID-19, things of that nature. Do I list now? Do I wait till it's over? Also, too, with prices the way they are, what do they do next? So some of those things are still in play, and we're not quite seeing that inventory come on like we were, say, this time a year ago. So with, again, more modest listings coming on market, slight cool off in inventory, I think we're going to see two things happen. One, a little more options for buyers. Not necessarily a strong buyer position, but not in a situation where buyers are competing against multiple offers. Two, so that's good. So a little better selection of inventory, and probably not as hot a buyer choices now in there, in that $335,000 price segment. And that's still going to be pretty warm, but not on the what we maybe kind of call the red hot market. Moving up a little bit in a couple of tiers, we actually still see pretty robust demand. Again, not multiple offers coming in right at once, but still multiple offers to where they're still commanding good price points. But again, a little better selection of inventory. And then I think that's also going to translate into a leveling off of the median home price. I think we're going to probably, for the next couple months, it would be interesting to track what that median home price will look like. And I think that's going to sort of bubble a little between 330 and 335 as to how, inventory, where it's coming on and how it's moving out over the next couple months. There is usually a slight softening in an election year, going into the election. We're about 50 plus days away from the election. So, or at the 50-day mark, roughly. I haven't watched the news the last couple of days on the politics just to see where we're at, but we're kind of moving into that final phase. So I think there's going to be a little bit of, okay, let's kind of wait and see. Now, a lot of that usually means that defers to after the election, or maybe even after the holidays till the beginning of the year, we're actually already having a lot of conversations on 2021. So it's interesting, instead of maybe waiting until towards just before Thanksgiving, sort of that late October, early November conversation for 2021. We're actually seeing that now. So I think a lot of people are kind of pre-planning whether or not they want to buy, sell, what their options are. So we're having those conversations as we speak. So I think people are looking just a little further out. I think there's going to be a little tempering the next couple months. So it's going to be interesting to see. We're still, there's still a lot of concerns out there, questions about the eviction moratoriums, especially in Las Vegas. We extended through October 15th. There was also the CDC mandate, except there were some loopholes there. So a lot of that's in play. Also, too, forbearance and mortgages that are out of whack based on delinquencies or things of that nature. Those are all items we're still continuing to monitor and track. We're going to probably be providing some updates here over the next week with some more recent updates. What we are seeing overall is in our current situation, the numbers and levels of delinquencies are still at a fraction of where they were back in the Great Recession in the 08, 09, 2010 period. So again, they're at a fraction of those levels. However, they're definitely ticked up to highs that we haven't seen in over 10 years. And again, still above pre-pandemic levels with COVID in place. So we're going to bring some more stats to that in some upcoming episodes, so you again continue to have a good sense of where our housing market is going to be trending. And again, we kind of like to take a look at things because of so much moving on in flux right now in a couple month segments. But it is interesting to see, overall big thing. August still a decent month when you couple it with July. 2 pretty robust months on average overall. Price point now again at another high, but we are starting to move into a period of the fall elections period coming up. I think that's going to give us a little bit of a breather, give buyers a little more inventory choices, give sellers still a good opportunity to sell their home at a great price point, because I think we'll see a little leveling off, which we need to in the median home price. So love to hear your questions and thoughts on those. Definitely do us a favor, put those questions and comments below. We'll get back to you as best as possible. And that's that's the August update. Again, love to hear what you think. Now, we've got a couple other great episodes coming up. Tomorrow, we will be doing our normal weekly Wednesday update. Thursday, we're going to talk a little bit about golf. We're looking to lock in a special guest because this is U.S. Open week in September. Normally it's Father's Day weekend, but it is in September here at Wingfoot, one of the great golf courses in the world. So we're going to talk a little bit about golf, have a little fun about that. And Friday, as I like to call him, the indefatigable, the enigma rolled up in an egg roll, John Curtis himself. He's going to be back, and we got a couple of little subjects to talk about on Friday morning. So be sure to tune in. And again, thanks for tuning into today's episode. If you have any questions, reach out to us. We'd love to chat with you. But again, my name's Don Cramer. My partner, Colleen Schaefer, and I make up the Cramer Group at Urban Nest Realty, where more now than ever, your real estate experience matters. So if you have questions about buying, selling, or investing in Las Vegas real estate, reach out to us. We'd love to answer your questions because we want to make sure you have the information best as possible for you to make the right decision. Till next time, we wish you a wonderful day. Take care. Bye-bye.